Good weekend, everyone. I hope you're all doing amazingly well and relaxing after a fruitful trading week. John Henry here, SSFTG. Welcome to the week in review in the US markets. In this, we take some time out to look at the technical overview of the markets and what to expect as we move into the next week. If this is your first time on the channel, be sure to like the video and subscribe to it as well so you don't miss any of our new content coming out basically every single day. So first off, starting off with the week calendar ahead, we have Monday being the 7th, and looking at the 7th and kicking things off, well, the 7th doesn't give us anything to really work with, actually. We've got a bunch of 11:30 news, which is nothing more than just U.S. 6-month and 3-month bill auctions, and then at 1500 Eastern we have the U.S. consumer credit, but a very, very quiet Monday. On Tuesday, the 8th, things step up a little bit with some larger news with the U.S. international trade data coming out at 8:30. The forecast is negative 83 billion, and then it kind of falls off again. We have the 855 U.S. Red Book, and then some 1300 U.S. 3-year note auctions and all that fun stuff. Tuesday does, of course, bring us the U.S. API inventory numbers, so that does give us something to expect with the API going into Wednesday's crude oil inventories. But aside from that, that's really the only big news we have is at 8:30 so far on Tuesday. For Wednesday the 9th, our first news announcement happens at 7 o'clock Eastern, but it's a small, very small announcement. The first real number doesn't really happen until 10 o'clock, and that's the U.S. wholesales inventories. That's a medium announcement, not a very big one. And then, of course, Wednesday does bring along crude oil inventories, and depending on what the API comes out as, that will give us an idea of what to expect for the crude inventories this time around. On February the 10th, then we have some interesting news coming out of the OPEC side of things. OPEC at midnight has the monthly report that will 100% move the markets around. It'll be an interesting midnight, question mark, for crude oil. At 8:30, we also have the U.S. initial jobless claims forecasted at 230,000. The U.S. CPI is coming out at 8:30 as well, forecasted at 0.4%. That's really the only major news that we have going on for the 10th. Later in the afternoon, we do have the U.S. federal budget balance, which can definitely move things around, but for the most part, we really don't have anything else for the remainder of the day until we move over into the 11th. Now, the 11th going into Friday, the only thing we really have is at 10 o'clock. That's the University of Michigan sentiment preliminary numbers. Their forecast is 67.5, and you'll notice that is also the only large news announcement that we have for the day on Friday. So it's a really kind of calm week. I mean, for the entire week, we've got 1, 2, 3, 4, 5 announcements that are actually major. Kind of calm and quiet. We'll have to see if the markets can bring something to the table instead of the news. And with that in mind, we can switch over into the Nasdaq for the first chart of the day, and we've got a couple areas of interest to definitely keep our eyes on. First off, as we're going into this week, we need to understand that the market is definitively migrating its way lower, and it's doing it in what initially kind of looked like a channel, but then ended up not really being a very good channel and ended up being more of a megaphone, and off of that megaphone, they haven't really confirmed either side yet. We've got a bit of a mixed bag. One major thing that does stand out, though, is that we have a brutally obvious swing high, and the only other one that we have before that is way up here. So if the shorts are going to be looking for a continuation phase, they either have to be selling with their stops above these highs or with their stops above these, and these are really, really far away up there. Now, of course, sellers won't necessarily want to hold on to that much risk, but as we're going into the following week ahead, going into February, and the market's demonstrating some it's pretty stable to the downside, we're rolling up into a zone of resistance, and the first zone of resistance starts stepping up into the 14,972s. That's where the sellers can try to resume with a lower high back to the downside for a continuation phase. Now, if the market does want to try to find a trap above the highs, again, we know that a lot of shorts will have their stops above here, so there's plenty of space, but realistically, if sellers are going to be looking to sell, what better spot than to stop out all of the weak stops along the way, but not take out the major stops up here. And that's going to give us a zone of resistance between 15,311 quarter to 15,477 quarter. So we've got 3 major zones to worry about as far as Nasdaq is concerned going into this week for resistance. From the support side of things, we don't have as much to work with, actually barely any. We only have one zone, and that would be the assumption of higher low buyers trying to get the continuation up, and possibly even reverse this all the way back up above 16,000. Those buyers will be looking to creep in at the 14,215s down to 14,090s, and it's really going to be hard to ignore if it starts dipping down there, the massive 14,000 level, and speaking of which, where we are now, the massive 15,000 level. There's a lot of big psychological areas that the Nasdaq's just kind of ping-ponging between here. Now remember, if you aren't sure what's going on or how we're finding all of these major zones and major turning points in the markets, check out our Day Trading Academy. It's loaded with almost 20 hours of video course material so you know exactly how to approach the markets and why they're doing what they're doing. We also build a game plan every single morning with YouTube members ahead of the New York Stock Exchange Open. If you're interested in that or finding out more info, click the join button below the video. Next up on the list is going to be the S&P, and we've got a little bit more to work with on both ends. Here again, with all of the US index markets, it's still pointing to the downside, but we're in a bit of a mixed bag. It's a strong bounce off the lows. We've got the moving averages kind of converged against what price is doing, given that the medium and fast are above the slow, but price action's technically still making lower highs and lower lows. A little bit awkward there. As far as a resistance zone goes, we do have an incredible amount of resistance on the S&P, which has already been tested once at 45.83 The upper band of that is at 46.2175. If the bulls are trying to maintain a higher low transitional phase to rotate the market back up above and possibly even challenge all the way back up to that massive psychological $5,000 range, then we're going to have to break through some of this resistance. And given that the sellers have shown up so nicely, it's more likely that buyers are going to want to buy some cheaper prices so they can position themselves better. The first zone of interest, 43.94 half, then 43.34 and 43.03 half all the way down for that higher low transition. The Dow, much like the rest of the index markets, is demonstrating this sideways, choppy, sloppy action, and very similar to the S&P, actually already has a physical test of its first zone of resistance at 35,471. The next area is going to be 35,710, and this is really just the assumption that sellers have this lower high to work with, and they're going to want to try to transition this back to the downside to keep this going lower, preferably down through the actual lows. And remember, the Dow is really kind of missing a pullback. It's got these three higher lows all the way back up, and that makes it super, super awkward for the bulls because they haven't really been given a trap to get in on. And that brings us to the next spot. If we can get a halfway decent pullback, 34,296 would be the first dip under any kind of major swing, and that's, I use the term major pretty loosely here. The next zone would be a deeper dip on those higher low transition buyers at 33,874 to 33,665. It's a big zone of interest either way, but just like all the others, we're kind of in the middle. We need a bit more time and a bit more info. Gold, on the other hand, not as slow and not, totally different ballgame. This thing has taken 7 shots of espresso and is running circles around the house right now. We've got all of the support, which is a very, very small band of support. That's down at 1790.1 to 1788, and we did have a test of that support already, met with a very large bounce to the upside. The larger perspective, obviously, is trying to get the market to rally up, but we're sorely missing some new highs. And because of that lack of new highs, sellers will be looking for a transitional lower high to try to take things back down again. We've got technically 3 major turning points to keep our eyes on. The first one is 1824.4 on the lower end, more towards the middle, and more around that previous structural base of support where the buyers will be trying to buy in, now likely trying to get out. And if they're actually given a chance to get out, plus a little bit, chances are they will take that opportunity, and that's going to be around 1834.4 to 39.1. Crude oil keeps lifting off into the ceiling, and it's up there in space with the Tesla that Elon sent up there. We have rotated above the $90 mark very aggressively. In fact, it's made it all the way up to 93.17. Obviously, the bulls mean some business here. As it stands, the buyers have had very little pullback to work with, and because that's the case, they will be hoping and hunting for any pullback they can get their hands on. With that in mind then, the first zone of support is very aggressive. That would be basically at the breakout structure, breakout pullback, but that would be at 89.26 for the first zone of support. A much more structurally sound zone is going to be more towards the lows of this bottom range at 87.41. And if they do want to try to trap the lows, that's where the money hits. That's going to be 85.57 to 84.64. Then we can start getting that JP/Goldman trap, whatever you want to call it, on the lows, just to rotate it right on back to the highs. If we zoom out a little bit, we can see that this thing is just screaming to the moon, and it doesn't look like it's ready to stop yet. If anything, this is still super reminiscent of that wide-legged 1, 2, 3, 4, 5. And that fourth wave pullback down to 84.64 to 85.57 would be incredible for a continuation phase back up from there. And then finally, we switch gears over onto Bitcoin, and Bitcoin is a little bit of a mixed bag here. Obviously, from the grander perspective, the market's been falling for quite a while. It's in a very sturdy downtrend. The trend is, it's very, very obvious in terms of where the market's going. But we do know that we are cycling off of some major zones of support, especially around this $34,000 mark, where we have seen a brick wall of support, even an area where countries are buying in on that dip. So with that much support, it kind of begs the question, if shorts are going to be coming in, they're not going to want to sell too far down. It doesn't make sense to sell low and hope it goes lower. Sometimes it works out nicely. Other times, it's an absolute annihilation. So instead of taking the risk on something like that, it looks a lot more beneficial for shorts to look for an obvious turning point off of previous structural resistance zones to try to get it to go from there. That way, that allows them to control their risk a little bit better above these previous swings, and that gives them a bit more flexibility in terms of a rotation back down. If it doesn't want to be as smooth, then they can kind of play ball back and forth and reposition themselves. And if it does want to drop back down through the floor, then we may be able to find some of those buyers on the dip. And those buyers on the dip are going to be looking for that higher low transition to keep things going. Now, the bulls from that perspective, first zone of interest, 38,803. Then we've got 37,310. And those are the more aggressive ones. Again, buying that breakout, pullback structure, the bottom of the support, all of that fun stuff. Kind of rinse and repeat, really. But if we can get that dip trap underneath the lows, that good old JP Goldman trap, then we're talking, right? 35,863 to 35,123 becomes significantly more interesting for that trap rotation back up. All right, folks, so that's going to do it for me. If you're looking for a way to hang out with me and trade with the rest of the VIP crew, you can sign up for a 1-week trial to our live trade room. You can get more information on that on the main page of SSFTG, as well as a 24-page guide on risk reward, totally free just for signing up. VIP members have live trader access included in their membership, so if you need more info on that, again, that's all on the main page of SSFTG. But if you have any questions, comments, even topics or suggestions for new videos, drop them in the comments below. I always love hearing from you guys. I hope you have an amazing week. Hopefully you're having a fantastic weekend, and stick to those plans, stay safe out there, and until the next one, we'll see you all then. Thanks for watching.